Hey there, so welcome to another overview of the latest UK house price index from Zoopla and HomeTrack. And I have a extra report this time round as well, as we have the quarterly UK rental market report to do. So I'll go through the sales report first, and as usual, I'm just going to run through the report and summarize it. And as I recommend, always, look at the report for yourself, go through so you can read it in more detail. My guidance here and my overview is just to give you an overview of the report, but also my point of view and my perspective from a property investment point of view when looking at these reports. So going into the latest house price index report from Zoopla and HomeTrack. So headline figures that we have here is there's been an increase of 1.5% for the UK house price inflation year on year for October 2024. 2.5% is the forecasted UK house price inflation for 2025, and they're projecting the number of housing transactions, so that's sales, in 2025 to be 1.15 million. Now, we can go into the report, and I'll just show you here, this graph here is just showing the sales market activity and how it's recording a strong end to the year. So this shows the year-on-year change. We can see buyer demand is up, number of sales agreed are up, flow and supply is also up as well, and stock of new homes is also up as well. Hence why we've had a very strong end to this year. So going into the report, they have got here that the outlook for the sales market in 2025, what they're forecasting. So summarizing this part, they're saying that 2024 has seen growth return to the property market, and prices are higher than they were in 2023. So that's good. It's performed better than forecasted, and this is due to mainly growth in household incomes and also the lower mortgage rates that we have seen come to the market. And they're expecting house prices and sales volume to be higher next year, and that's even if mortgage rates don't fall. So they're forecasting it to be positive next year based on mortgage rates staying the same and not falling. So, if mortgage rates do fall next year, then they anticipate the prediction and forecast to be even higher. So it'll be a better property market next year. Moving along to this headline here. So lower mortgage rates support return to price growth. So this is something we've been mentioning probably in the last couple of these reports, seeing the mortgage rates come down. But 2024 has seen buyers and sellers also returning to the market. Now, this has seen a healthy level of stock in the market, which has been supported by the demand and has helped support the demand as well. Sales agreed are ending this year strong, and that's also a sign that buyers are likely trying to avoid the higher stamp duty rates that are going to come in from April 2025 that were announced by Labour in their latest budget. Now, sales agreed up 19% year on year. Buyer demand is 25% higher. So there's more confidence and more demand, and this has helped to see the house price inflation of 1.5% increase for the year to date. To put that into context, this time last year, we were seeing a 1.2% decrease year on year. So the property market is moving in a very, very positive direction, and it's been a very strong year overall. Now, all regions, as it stands at the moment, are seeing positive house price growth. So very positive. Southern England is seeing the lowest amount of growth, and that's remaining just below 1%. Now, this really highlights the north and south divide between rental price inflation, rental price growth, which we've seen for a very, very long time, mainly down to affordability levels. So, for example, you have Wigan at the moment experiencing 3.9% house price growth, which is great. Okay, so you can see here, this graph here is showing you that the house price growth is returning positive in all areas. So the grey is October 2023 and the purple 2024. And you can see all across the board, 2024 is higher, which is great to see across all regions, which you can also see a lot of them last year were in a decrease territory. Now, stronger income growth repairs housing affordability. So income growth this year has been better than expected. The latest Office for Budget Responsibility (OBR) data shows household disposable incomes increasing by 15% over the last 2 years. So that's good news. So this has helped to see positive price growth for properties. Household income has gone up, and the size of mortgages for purchases and the purchase prices has actually gone down. So that has helped the property market. If we look at the mortgage rates, the headline here, mortgage rates to hold steady at current levels. So the mortgage rates versus last year have fallen 1%. So the current average is sitting around 4.1%. And they expect rates to stay steady. They also expect lenders to innovate around how lenders assess the affordability for purchasers for longer mortgage periods, so like 5+ years. So this, if that does come into play, this will help buying power, because it will open up the door for more people to buy or buy at higher levels or property prices that they may not have been able to afford before. And this will bring more demand over the coming years if this comes into play. This could also be a real catalyst for house prices. If that does come in and we see mortgage rates change as well, if they do lower, this could be a real catalyst for seeing massive amounts of demand, affordability levels much better for a lot of people, and this would have an upward effect on house prices. But of course, that's just a forecast and not necessarily going to be the case. So moving along to this header here, housing affordability improves over 2024. In short here, they're looking forward, they're expecting property prices to remain what they class as undervalued over 2025. For some time, due to mortgage rates and other bits and pieces, household incomes. Some house prices have been perceived as overvalued, by slightly. Same when we had the global financial crisis back in 2007. And at that point, house prices were over 40% overvalued at that time. And you saw house prices fall sharply over 2008, 2009 because of that. What they're saying at the moment is, in the current market, house prices aren't overvalued. So this will help support sales volume and demand going into 2025. Affordability, a drag on price growth in southern England. I'll keep this very short. We've been talking about this for a long time, and it's pretty self-explanatory. This pretty much just means that the south will likely underperform over the next few years in compared to other regions because of affordability levels. Prices are too high. Incomes aren't rising fast enough to, meet those prices, and it just means they're slower in comparison to other regions, which we've been saying for a while. We've seen this, and hence why, as an investment company, we've been focusing on more affordable regions: Northwest, Northeast, Midlands, etc. Stamp duty, an extra drag on house price inflation. So this is talking about next year, from April 2025 in England and Northern Ireland. The 2% band, the 2% stamp duty band for owner movers will return, and relief for first-time buyers will reduce. So basically, people are going to end up paying more stamp duty. To put that into context, half of existing home movers will see stamp duty rise 83% from next April. So that's roughly £2,500 more for them to pay. The proportion of first-time buyers having to pay stamp duty will double. And look, this will be a factor that will hold house prices in check, stop them rising more aggressively. We're going to see positive rising, but this is just going to keep them in check, which will give it a more balanced market, and we'll see nice, steady, gradual growth. 1.15 million housing sales in 2025. So this is the forecast that Zoopla and HomeTrack are putting forward for house sales. They're expecting a growth in housing sales of 5% over 2025. And this time last year, we're actually seeing, so in today, we're seeing in our pipeline in sales, just this is the property market, I say but I mean the property market. The property market's pipeline is 30% higher than this time last year. Incomes are increasing. If there's changes to lenders looking at or assessing affordability, this will help to fuel this even more, fuel more demand, and therefore housing sales, the volume also. So but they're forecasting housing sales to be 5% higher, equaling 1.15 million for 2025. So you can see here on the graph how they're seeing that flow there. 2024 and 2025, they're seeing an uptick here. So coming on to the summary that HomeTrack and Zoopla are giving, well, they're in summary, income growth and lower mortgage rates have helped pull back the property market. They're forecasting 2.5% house price growth in 2025 and expecting Southern England to lag in house price growth. I would probably say, my forecast is probably slightly higher than that. Based on what we know, I can see why they're saying 2.5%. But I also think, some of the more affordable areas, we're going to potentially see more aggressive growth there. And I think the sort of UK average will probably, at the end of 2025, will be more in line with, I'd say, maybe 3 to 4%. But that's just my point of view. And then if we look here, we have the image, and you can see the regions for the growth they're experiencing. So Northwest and Northeast performing very well. In England, 2.9%, 2.6%. Yorkshire and Humber, 2.1%. So, very strong areas. And you can see, as noted in the report, Southern England struggling in more than those of the northern counterparts in terms of growth. So London 1.1, South East 0.3, Southwest 0.4, East of England 0.3%. And as we've established, mainly because they're less affordable areas. Now, this chart here is showing the year-on-year house price growth for the 20 major cities. Manchester 3.1%, Liverpool, and I'm just picking out the main ones we deal with as a company, 2.6%, Leeds 2.2%, Newcastle 2.2%. So the normal players are still sort of heading up the chart there for England in terms of major city house price growth, which is good to see. So overall, a very positive outlook for the property market. It's been a strong end to the year, and that strong end is going to flow into 2025, where we're forecasting, and they are forecasting, to see another positive year for the property market. Now, coming along to the rental market then. So this is a quarterly report, hence why you don't get one of these from me every single month, like the house price index report. So headline figures, 3.9% is the annual rental inflation for new lets in the UK. 3,200 is the increase in average rental costs since 2021. So rental costs are going up, rental prices. Demand for renting compared to pre-pandemic levels is up 31%. So we can see here on this chart here, rental demand falls from a high base, a supply recovers off a low base. So purple is pre-pandemic, so that's 2019. And the sort of navy black color here is compared to last year. So if you were going to take a headline and spin it negatively, you'd say, oh, look, rental demand is down 29% compared to last year. Well, to put that into context, compared to pre-pandemic levels, which we saw and we still do as a very normal market, it's actually up 31%. And if we look at stock as well, stock is slightly up 12% compared to last year, but compared to pre-pandemic, it is lower as well. And the reason I say that is because pre-pandemic, we were having a good, healthy rental price increase year on year. So that's good to see. Okay, so going into some of these headlines here. UK rental inflation hits 3-year low. So this is what I mean by, some people can take out of context some of the data, and they've just used this headline here to make it seem like rental inflation hits a 3-year low. That can sound quite negative. However, UK rents at the moment have increased 3.9% year on year. And yes, we've seen the lowest rate of growth in 3 years, but we're also seeing earnings are rising faster than rents, which is good. So seeing those earnings increase will help to bring around the rental price growth, but it's still a very, very healthy number. If we go onto the supply and demand imbalance narrowing, so tied in with the rental inflation hitting a 3-year low, because we know supply and demand is a massive factor in that, and the imbalance they're saying is narrowing. So the report shows demand is lower, but that's just year on year. It's still higher than pre-pandemic, so you have to take that into context. Supply, and what they're saying here as well, they're actually saying, look, supply and demand imbalance is going to continue into 2025. Supply is going to be lower than the mass demand, so that's going to still promote rental growth in 2025, which is good to see. They have noted here, as you'll see by this headline and this head here, cost of renting £3,240 a year higher than 3 years ago. So rents for new lets are £270 per month higher than 3 years ago. That's adding 20% increase to what they're paying for annually since 2021. And like the sales market, they have noted here, areas that are less affordable will see reduced or lower rent rises. So, for example, London. Rental inflation lower across all regions. So this was bound to happen. We have seen massive growth over the last couple of years in the rental prices, and it is unsustainable. It's going to get to a point, but look, we are still seeing good positive growth. We're seeing income growth now, which is positive, and that will sort of help combat the slowdown in rental price increase. So as income growth takes place, you'll start to see rental prices reflect that as well. And we're seeing London recording the biggest slowdown, and that's from 8.7% in 2023 to it's gone down to 1.3% rental price growth this year. When we look at the chart here, so you can see purple 2024, grey 2023. So it's still all very positive. There's some that are doing very well. Look at the Northeast, for example. Northeast hasn't really changed that much. Northwest still doing well. So there are places that are still doing well in terms of rental price inflation. This is why I always say, and we always say as a company, it's always good to look at certain locations. Don't just take the UK average. I think that's what the market's doing. You need to be more hyper-focused when looking at these things. Rents rising faster in cheaper areas. Yep, again, we've already noted in this report that is similar to the sales market as well. So to summarize what they put here, the lower end of the market is seeing bigger rental price inflation. And that's even in cities. So in cities, in parts of the city where, the rental prices are lower, they're seeing better rental price inflation there because it's more accessible, more affordable. And locations wise as well, areas that are seeing better rental growth are the more affordable rental areas. Newcastle is an example in here, sitting at 8.7% currently for rental price growth, which is great. And look, compare that to inner London areas, rental inflation is less than 1%. So just showing how affordability as the norm is a factor here. Okay, moving along to this, no major expansion in rental supply over 2025. To summarize here, they're saying they're not expecting there to be any big increase in rental supply over 2025. So there won't be massive properties flooding the market, which will then dampen rental price inflation. There's private landlords are continuing to sell off at the moment, but they believe the peak is now behind us. So they're not expecting a flood of properties in the market. So it will keep the rental market very healthy in terms of rental price growth for investors and landlords. Multiple demand side drivers for renting. So to summarize here, what they're saying is unaffordability of home ownership, so people not being able to afford to own their own home, people relocating for working and studying, and the low growth in the social rented sector will see demand in the rental market stay strong. So there's going to be a lot of renters still in the market looking for properties. Headroom for rents to rise further in 2025. So they're expecting rents for new lets, so new rental properties, to increase by 4% over 2025, so positive still. And over the next few years, yields will grow due to the positive rental growth. So we're going to see rental prices increasing. So for people that have bought in the last couple of years or previously, or buying right now, seeing the rental price growth take place, this means yields are going to grow for investors and landlords as well, which is good news. Also, they're saying cheaper areas, as we know, with more headroom for growth, will see the strongest rises. For example, they're mentioning rural areas, smaller towns, which are well connected to larger cities, which they're already seeing already. And lastly, in this part here, lower mortgage rates will see more first-time buyers going back into the market to buy property, and this will be a factor which will just keep rental prices steady and not spiraling out of control. So first-time buyers will tend to be the majority or a high number of people that will be your renters renting out your properties. So seeing the lower mortgage rates and making it more accessible for them to now buy, for first-time buyers, will just mean, there'll be a dip in them there, which will sort of keep the rental prices from ridiculously spiraling out of control, and we'll continue to see nice, steady, healthy rental price growth. I won't go into this part here, one to watch different measures. This is just going over, the difference between how Zoopla and Home Track Index measure their rental inflation in comparison to the ONS. But if you want to look into that more, I have mentioned it before on previous reports, but feel free, and in our podcast as well, feel free to take a look at that. So just going into the rental highlights. So if we look here at the regions, really, really positive stuff all around, as you can see. Northeast doing very well here, 8.7% in the Northeast. Northwest, 5.9%. West Midlands, 5.5%. Across the board, very good. Very, very good. Even look in the Southeast and Southwest. London's the main place which is struggling a bit. But everywhere else is performing very, very strongly. Northeast especially, 8.7% is great numbers. And if we look at the top cities here as well, if we come to this one here, actually, here we go. Look, so Newcastle 8.7%, Liverpool 6.5%, Manchester 4.2%, Sheffield 3.1%. Really, really, really good positive rental price growth there. So overall, that is the rental price report from Zoopla, so the rental market report, and I did the UK house price index as well. Bit longer this one because obviously I've gone through two reports, but hopefully that's been healthy. And just to finish here on the rental market. So look, in terms of what I'm seeing for the market next year, I'm in agreement with this report here. It will be healthy. It'll be great. I think we're going to see sort of, especially in certain areas where we mentioned where it's more affordable and sort of the main cities and the main players we're seeing at the moment. like your Manchesters, Newcastles, Liverpools, etc., we'll continue to see great growth there. And it's going to be a really strong year there, which is going to be great for yields for investors and landlords. Hope that's been helpful. And as ever, if you need anything, always feel free to reach out.